There we go. Welcome, everyone. Donald Davidoff, co-founder and CEO of Real Estate Business Analytics, here for yet another episode of The People Behind the Performance, where I sit down with key leaders and disruptors to dive into what's really driving the real estate industry's success, the role data plays in it, and tell the stories of the people behind it all. I'm here today with Christopher Yip, who is partner and managing director at RET Ventures, a venture capital firm focused on driving innovation in partnership with its base of more than 40 strategic investors. Those investors own and manage over $600 billion of real estate assets. Prior to joining RET Ventures, Chris spent 12 years at leading global private investment firm TPG. Over there, he led growth and private equity investments in tech-enabled companies, partnered closely with CEOs and entrepreneurs, and served on numerous boards. He began his career as a consultant with McKinsey & Company, primarily in the communications and media sectors. Welcome, Chris.
Thanks, Donald. It's great to be here.
Yeah. So let's just start. Let's just start at the beginning with, as you think about the state of the industry today, what's on your mind?
Well, I think we're at a fascinating place in the industry. You have, we think at RET, certainly a secular just acceleration in the adoption of technology in all parts of the business. And I know we'll talk about that some more, but we are also here sitting in 2022, coming hopefully out of 2 years with COVID and a real shift in how people live and work. And then on top of that, we have a rate tightening cycle and valuations changing rapidly in technology and real estate sectors. And so it's certainly a lot to navigate.
Yeah. So, so many little goblins in the corners. What is it that keeps you up at night these days?
Well, I think like everyone, we're thinking hard about what the impact of this economic basically the macroeconomy, right? How is the consumer going to feel, which very quickly translates through to how our industry, residential real estate, where a lot of us spend time, what are going to be the implications on the deal markets and rents and vacancies? So there's a lot to figure out.
Yeah, it's interesting. Just speaking as a tech CEO myself, I've been paying a lot of attention. In fact, I've got a board meeting coming up in a couple of weeks. It's going to be a big topic of conversation. I'm curious what you feel about this. I'll sort of give you my sort of naive take on the observations I've got, what I've been hearing, and then would love to get your perspective. So a couple of things we're seeing. Obviously, publicly traded tech stocks getting hammered, right? That's big. In fact, I even joked with my partners, not even joked, said, some of that may be good for us because all of the hiring freezes and even some layoffs, it's hard to hire these days. And as a small company competing with these big companies, I'm actually kind of glad if Google and Amazon and Netflix are not hiring the same way they used to. So that's kind of an interesting headwind, tailwind. I'm hearing that tech companies that have profitability way in the future are getting hammered because obviously with now not near zero inflation and interest rates, discounted cash flow comes down. At the same time, I'm hearing that, like the early stage startups are still holding valuations pretty well, that people are sort of betting on the long term a little differently than the later stage ones. Is that really what's happening? Is that just wishful thinking from the startups or what?
No, I think there's truth in all of that, right? We to your point have definitely seen, I think the market has spoken that tech companies that are not profitable, that don't have a pathway to being profitable, that don't have a sound business model, or that need to raise meaningful capital in the near term, those are being discounted. And you've seen multiples come in, valuation come in pretty dramatically. You see it in the public markets, in some cases, 70, 80%. I do think even in that market, you're seeing a differentiation of companies that do have sound underlying unit economics, that do have a funded business plan, they have cash, they're going to make it through the next 2 years. Those are being rewarded for that. I do think, to your point, something we see across, we've got 27 investments in our portfolio now, mostly at the early stage, so Series A stage and on. I think you're right in the maybe the day-to-day of the business. It's been really hard to hire technical talent. The talent market, as we all know, has been really tight, especially for developers, engineers. Many have gone overseas to, it just surprises me every time we meet a new company, all the new countries that we're finding development teams based in Eastern Europe, South America, and so forth. And that's because the markets here are tight. So I do think that's a a good thing in a way for folks like yourself, right, that are
Mhm.
hiring. And then I think to address your other point there, yeah, we as Series A focused investors, it's more of, for better or worse, a binary decision, right? We are providing financing in exchange for 10, 20% of the company. That doesn't necessarily change. Your capital needs for the next year don't necessarily change. And it's more of a, is there product market fit? Has this business, has this team figured out something that its customers want and need? And if
Yeah.
so, this company will double, will triple, and it'll be successful. So I do think I agree that at the early stage, things have changed a little bit less than the later stages.
Well, we're probably going for a round in the next 6 months or so. So I hope it stays that way for a little bit. It's going to be an interesting ride. So that's sort of stuff that keeps us up at night. What are you most excited about? You talked about this inflection point in the industry. Tell me a little more about that.
Yeah, I think, and even over the last 2 years with COVID, I think you've seen a real change in the willingness of institutional real estate owners, operators, developers to pilot, implement, deploy technology solutions in their portfolios. Now, it's always, of course, there's been technology in this industry, as you know, for decades, so it's not new. But I think it has always been a conservative industry, and I'm, as we'll talk about, I know myself, new to the industry, so I'm still, coming up the learning curve. But I think what we're seeing is, through COVID, a lot of folks had firsthand, right, a necessity of implementing technology to, how do you lease buildings when the leasing office is closed?
Yeah.
How do you engage with the residents when the maintenance staff is out? A necessity to adopt technology, and I think that mindset has, I think, fundamentally reshaped, accelerated, advanced the willingness going forward to look at existing ways of doing things and consider the impact that technology can have.
Yeah, it'll be very interesting to see how much that pace sustains, or do we revert to the mean? I mean, listeners of this webcast have probably heard me say this before. One of the things that's really interesting about our business that really makes us different than any other vertical I've ever been associated with is the lack of existential risk. If you have a good portfolio geographically, right, what are the three most important things in real estate? Location, location, location. It's a question of how much money you're going to make, not whether or not you're going to make money. And so I've always said that the reason that the industry is so conservative is you get, if something goes wrong, you get punished, but you don't necessarily get rewarded the same for things going right. Or at least when you say no, nobody knows you could have made more money. What I think was fascinating about COVID, to your point, is all of a sudden there was existential risk, right? If I can't lease, I don't have leasing associates on site. If I can't lease, then, oh my God, wait a moment, I could maybe go out of business. And all of a sudden there was a rush to the self-guided tours, smart home tech, which obviously you guys have been pioneers in, et cetera. It'll be interesting as we revert back to lack of existential risk. I certainly hope some of that awareness now that you actually can move quickly will stick around. I'll tell you honestly, I fear that we'll revert more to the mean. I'm sort of curious, does that resonate with you? Do you think maybe I'm being a little too pessimistic? What do you think?
Yeah, look, I think there's certainly, there's certainly truth in that, right? Which is that there was an existential need, and that, necessity is the mother of invention, right? You just had to adopt. But I do think, and I see, promising signs from my vantage point that we have portfolio companies like Funnel, our CRM business, which is in the early midst of portfolio-wide deployments across a number of our large national leading owner operators. And by the way, yes, there's where they are tackling all the usual implementation, deployment, change management programs, which we all know in enterprise software is part and parcel. And I think when there's a little less immediacy, to your point, then some of those things come to the fore again, right? Where you just have to focus on the change management and the integrations and take it one step at a time. But these are commitments that have been made, I think, from the top down, decisions to adopt new solutions that I think is representative of hopefully some change in thinking.
Yeah, I mean, lest anybody listening think I'm a total cynic, I do think that the new steady state will be more aggressive than the past. I'm nervous about whether it'll be a little too close to the past than I wish it would be. But that's one place where I hope I'm wrong. I hope the industry really does continue to move faster. Before we turn it over to maybe sort of your personal backstory, maybe share with the audience a little bit. Some people listening probably know RET really well. Some people may not know much about RET at all. I've known John Helm, who obviously was the founder, for many, many years. I mean, I know him back from his My New Place days. It's a very unique organization. Dare I say, even become an institution. I talk to many people, and your Park City annual get together of all your LPs has sort of turned into a tech event for the industry, and the focus on multifamily. I'm just fascinated by what RET is doing, because there's literally nothing else like it that I'm aware of.
Yeah, I appreciate the prompt, and I think your introduction in the beginning was great. So maybe I'll focus on some of the nuances of the model and the strategy. We see our mission as twofold, which is a bit different than most traditional venture capital firms, financial investors, right? Of course, we seek to make great investments, generate great returns for our investors, which we have. With all modesty, our first fund has been very successful. It's a top quartile, if not top decile, venture capital fund of any ilk, let alone within the sector. But the second mandate, equally important, is we really see a mission to bring innovation via technology to the sector in partnership with our strategic investors. And that's the group, as you mentioned, of 40 plus owners, operators, developers who together have about 2.5 million units of rental real estate. We have, I think at last count, 9 of the top 20 NMHC owners and operators. So we have real scale in that group. And I think what we've really focused on very deliberately, if people say, why do you focus on multifamily? It feels very narrow. So first of all, rent tech. So there's single family rental as well. There's a lot of commonality in those tech stacks. But we're focused because we think there's benefit in having that scale, that critical mass in the group in one asset class, where there's a commonality of pain points, of needs that they are finding with the existing technology stack of the industry. And we can partner with that group and create a platform and a process, an ecosystem to really do all the things that we do, which is identify technology needs and themes, go meet startups, get feedback on those startups from hopefully development partners and future customers of those startups. We make the investments. We hopefully get advantaged investment terms because of the value we can bring to the companies we invest in. And then the back end, spend a lot of time developing that commercial partnership and commercial traction for the startup. So that's really how we view our business, which I think is, hopefully you'd agree, pretty different than how other organizations, whether they're consultants, whether they're pure investment firms, or whether they're the innovation group within a large strategic, we are in a way all three of those things.
Yeah, no, it is fascinating, and you'll get no argument from me on a focus on rental housing tech, because that's certainly a decision that we made at REBA. There's such a crying need for it. I sort of, when people ask me about commercial other stuff, I'll never say never, but let's conquer the market in front of us first. I am curious, as you were talking about that, it suddenly hit me, maybe the reason you are top decile or top quartile is because of that uniqueness, right? I mean, if normal PE money had as much access to the inner thinkings of the customers who are going to buy, right? Because what's PE trying to do? Guess on which tech products are going to be successful. Well, what's the best way to guess what products are going to be successful? Ask the people who are going to have to buy them what they think will be successful. So I'm sort of fascinated at this. Like I know John had a vision of some of this, but maybe a good question is there anything that you guys have learned over the last couple of years that sort of surprised you? Like you knew you were going to be good at X, Y, and Z, but what you didn't realize was putting this all together, you've created something, different, or there's an angle maybe you hadn't thought of at the beginning that's been a really pleasant surprise.
Yeah, I think a couple of things. A pleasant surprise certainly has been how, and for me, being new to the multifamily industry, has been how collaborative the group has been. You would think, and I thought certainly from afar, right? You get 40 odd, in theory, competitors to one another in a room and say, we're better together. that may not always sell, and you may find people protective of sharing the experience they've had with a certain company, lest they give an advantage, right, to their competitor. But we really haven't found that at all, with rare exception. And I think that's because, to your prompt, I actually think there's two parts of it. One is certainly having a partnership with the customer in saying, what are your needs? And then we can much more effectively find the companies that solve those needs well, and that helps making good investments. But on the back end, I think that's the second part of that collaboration, which is I think everybody has seen that there's not necessarily a first mover reward in this industry. To your point, I think in the past, people have been burned by being the first adopter, and then to see those not succeed. And so I think our group has recognized that sort of stronger together, right?
Share the risk.
If 12 of us are going to do this together, that is better than me being a first mover and failing. So I think that has helped with the collaborative dynamic, for sure.
Yeah, that's one of the things that's wonderful about our industry. The highly fragmented nature of the industry really does limit. It's not American Airlines versus United, or UPS versus FedEx. One of the things I love about the industry. Okay, let's switch gears and get a little personal again. How did you get started in this industry? What brought you in?
Yeah, so I have a bit of a different background for both multifamily and for venture. So I spent, as you mentioned in my bio, prior dozen plus years investing later stage in corporate private equity at TPG in San Francisco. I was focused on business services, technology services, industrial services. And by the way, it was a great grounding for the real estate industry. I spent time in building products and construction, distribution, MRO, logistics, and really actually the last couple of years there, I was starting to focus more on what is now maybe the more building technology driven side of prop tech. So building management, energy efficiency, building services, facility services. And that was really an eye-opening opportunity for me to say, wow, we're at this point where technology is really being adopted in the built world, in the real world. And then it was really just a very coincidental introduction I had to John. We had a mutual acquaintance that was a partner of mine that had known each of us for a dozen plus years and connected us. And I think as we've talked about, I just thought the model that RET had was really unique and special. And I joined just about 2.5 years ago now. So RET's been going for about 5 years, and I've been privileged to be a part of half of it. Excellent.
Is there a mentor or someone who's been particularly influential in your career?
It's a good question. I kind of have the view that mentorship's a little bit cheesy perhaps, but mentorship is all around you. And so I don't think I have a singular, this was my mentor, but I think what's been fortunate for me in any one of my roles is looking around and finding the 2 or 3 people and the things I can learn in different roles. And they might be peers, they might be below, above me. And I think it's taught me a lot of the, I'd say, investing and management lessons that I have today.
If you or RET had 10 times the budget that you have, what would you do differently?
Well, we are starting to grow to the point where we maybe not 10 times, but have a little bit of the privilege of deciding where to invest in our business. And I think we're doing 2 things. One is we're continuing to buttress our investing team, right? Needless to say, just having more people out there, meeting more companies, more trends, particularly as we see sort of the market map of technology expand, right? So 4 or 5 years ago when John got started, we were very much focused around property management, maintenance, the resident life cycle. We've spent an increasing amount of time, asset management, the transaction side of the business, development, construction, tech, right? The aperture's really broadened for us, so we need more feet on the street. I'd say, secondly, advisors. We've had the fortune of being able to bring some industry leaders, both on the technology and operations side from the industry, to us as advisors. We'll be announcing some of those actually in the next month or so. And then last but not least, we're investing in what we would call platform, which is trying to have some resources at our level, both in terms of helping to drive business development for our startups within our LP group and also to the broader industry at large, as well as investing in marketing and other community building resources at our level, which again is I think really investing in the platform.
No, that's really cool. This may be, you may be particularly well suited for this because you've been around the industry just long enough to kind of become an expert, not so long that you're a jaded old veteran such as myself. Is there a common myth in the industry that maybe isn't as true as it should be, or maybe a common myth or a myth you thought you came in and boy, that really nailed it? It's not a stereotype; it's legit.
Yeah, I think there's a common myth that everybody knows everybody, and it's a really small industry, and I think it's true. I keep on running into and finding just how small the industry is, and everybody's LinkedIn network overlaps, and every time I go with John to NAA or NMHC, we can't get through a hallway because everybody knows everybody. So
yeah,
I'm
no, that's true. Well,
true.
I was going to say it's in this industry, it's not 6 degrees of Kevin Bacon, it's 2 degrees of John Helm. That's very true. I mean, you're in the game of looking for disruptors. Is there a disruptor in the industry that you've got your eye on? Maybe it's one of the 27 companies you've invested in. Maybe it's something you're taking a look at, but maybe something that the audience hasn't paid as much attention. Like, we talked about funnel and CRM, things like that. But is there something just around the corner that people ought to be paying attention to that you're seeing?
Yeah, I think, and I actually think I would proudly say that we don't look for disruptors, because I think disruption can be a scary and dangerous word, right? When you're going around trying to break things, break process for the sake of advancement. And I think, as we've been talking about, it's not an industry given margins people have, the cap rates, where you can really take that disruptive risk. And by the way, I don't think the industry necessarily wants solutions for 20 years from now. They want solutions for the next 5 years that they can implement and make an impact on the business. So I think that's a lens that we take on it. I think where some of the really interesting things, and yes, we could talk about CRM and maintenance and smart home, but I think where some really interesting opportunities in our portfolio are twofold. One is bringing sort of data and technology to the upfront part of the business, meaning acquisitions, underwriting, development, and how do you make decisions better? Where I think if you look at most other industries, the investing industry for sure, right? Mm-hmm. The expansive use of alternative data, big data models. It's not right today. Most of the industry is still underwritten at best in Excel, if not on the back of a piece of paper, right? Yeah. So I think there's a lot of interesting stuff going on there. And then the second thing is, I think there's going to be a lot of change in how construction tech, just how buildings are built, how homes are built in the next 10 years. And it's been a long time coming, but we're starting to see building codes finally change. We have a company, Juno, which is doing mid-rise mass timber development. You're seeing more and more municipalities make a real push. You're seeing it come down the cost curve. So I think there's some really exciting things because we deal with real assets. And I think to see a change in how they're built is really exciting.
No, that's going to be very interesting to watch that. I mean, for affordability and sustainability reasons, we just can't keep building the way we have for the last century. Excellent. Well, you mentioned data and data-driven decisions. So that's a good segue to our sort of last part before our denouement, as it were. What does data-driven decision-making mean to you? That term gets thrown around so much. What does it mean to you?
Yeah, I think it is multi-layered, right? I think it is having access to high quality and the right data, right? Sometimes people look at data, but it's not accurate data. It's not refreshed with the right frequency. It's imperfect. It's not the underlying variable that you're trying to measure. So you have to have the right data. I think you have to then organize it. You need a BI system that can actually allow you to parse and display that data in a way that decisions can be made in an effective way by business people. And then I think you need, importantly, which I think gets lost a lot of times, is you need a commitment from a business process and decision-making perspective to actually use that data. I think all too often we see data-driven means you get a bunch of appendices added to your management report or your underwriting report, and nobody looks at it.
So how do you champion a data-driven culture? I mean, I think you nailed one of the real challenges, right? You can have the best data and great dashboards, but if people aren't adopting it, I mean, I don't think anything in the world is build it and they will come these days, right? You have to, be purposeful about your change management and other things. So yeah, I mean, let's dive a layer deeper on that comment, because how one can champion a data-driven culture, I think that's really important to this audience.
Yeah, it's a great question, and I would honestly say the practitioners out there, right, the operators, have the best handle on this. We see it. We have an investment in a company, Marker, that's doing analytics for market selection, geographic trends, demographic trends, and they're seeing great adoption. But how do you? And it's like they're exactly facing this question, right? How do you make sure that use of that data is hardwired into the investment process? And I think it has to come from within, right? Somebody in the organization, top down, has to change the decision-making process, whether it's changing internal performance measurement criteria, changing internal process, and saying that these we're reframing the metrics that we focus on. But there needs to be that, I think, that commitment.
It's interesting. I mean, our launch customer with Reba BI, the tipping point in their adoption was when their managing director, or equivalent title, when he insisted to the VPs that for the next quarterly review, they couldn't come to him with PowerPoint. They had to show him what was going on in Reba. And then he turned around and gave a presentation to the board about the quarterly results, all using Reba BI. And so that story quickly permeated, like the water cooler worked to his advantage at that point, where everybody went, holy cow, if he's comfortable in front of the board using that, how can I not? So I think that notion of a champion, I mean, I use that as an example, like a champion of someone on the inside changing the way process is done, and then everybody else, coming along. Very interesting. What do you see as the biggest challenges to getting data consistency and getting, like data should flow like water. I'm not sure it really does in this industry. So, what do you see as some of the barriers, some of the challenges, and maybe even what RET is doing to try to help?
I mean, I'm mindful that I'm a little bit the outsider, right? Telling people what in the industry, what they know intuitively. But I think there's really two things I can point to, right? One is, I think in the industry, clearly, and everybody knows, what I'm talking about. There are, incumbents who house a lot of the data in the industry, particularly for mid-sized players who don't have an in-house data warehouse that they manage, and getting that data extracted, right, from whether through integrations or partnerships is really hard. So sometimes you don't even own the data, right, that your own portfolio generates. That's a big issue that I think everybody knows. I think the other issue is we're an industry that doesn't have the data transparency, right? That I've been in retail industries where all the industry is available for scraping in real time at all times, and you build a web crawler, and all of a sudden you have all the inputs for a revenue management system, which well. And as right, our industry, you can't do that, right? Concessions, people are not reporting the inputs that you need. And by the way, you have survey products and so forth, but there are trade-offs with all of that. So we're an industry that has a lot of data opacity too.
Yeah, I'm smiling because in 2007, we started back at Archstone. We started building late in 7. We started building a scraper, and in mid to late 8, we were testing it. That went right into the 2008-2009 recession, and we quickly found that all the don't leave the door concessions were not getting collected in the scraping, and the scraping was telling us market conditions that we knew for a fact were not true. And so the whole project died at the moment, as it should have, because while it seemed like a good idea, it wasn't actually getting the heart of the data that was needed. So there's a real world example of exactly what you just brought up about the opacity that's out there. Okay, well, in our last couple minutes, let's have a little bit of fun. Since we're done with the heavy lifting, we always like to end the interview with a little rapid fire sort of James Lipton style Q&A. The only rule is don't think too hard, okay? So 7 or 8 quick questions. What book has influenced you the most?
Gosh, that's a tough one. I read a lot, and I'm going to take a pass and come back at the end on that.
Okay, we'll come back. Maybe think about something more recent. It doesn't have to be the one your whole life influenced you the most. What's your favorite time of the day?
I am a bit of a night owl, so I like the late hours.
Excellent. What's your favorite app?
been a new one through COVID. Slack has actually been great for productivity of our team of staying linked up. And I would have thought, hey, we've been using instant message and chat for a long time, but I think there's just something in being able to do one-to-many and one-to-one at the same place that's really helped collaboration for us.
Cool. What's your pet peeve?
Lack of accountability, and I think that's especially running an investment organization. I think I'm fine with mistakes. I'm fine with judgment calls that are wrong, but people just need to own up to it.
Yeah. So this is going to get way out of the tangible world that you and I are both used to. So we're going to get you out of your comfort zone. What's your spirit animal?
I'm going to say a monkey. Curious, dexterous, and they have a reputation, probably not true, but for being a little silly, which I can be sometimes.
I was gonna say a little mischievous as well. So
Yeah,
we're gonna have to
exactly.
we're gonna have to have another interview to figure out what that mischievous side of Chris Yip is. If you had two more questions before we go back to the one you passed on, if you had to pick one food to eat forever, what would you eat?
I think my poison is carbs, and I eat a lot. I love carbs, and I'm going to go with pasta.
Pasta. There you go. What is your go-to for having a good laugh?
My kids. I've got two young kids, 7 and 5, and they're just at that age where they're super silly and they're delightful, and every time I spend with them, I end up laughing.
Okay. Did you figure out a book yet?
I'm going to be totally lame. I haven't, so I'm going to pass.
Okay, that's fine. Thanks again for sharing your insights, Chris. Just briefly, where can anyone more interested about RET Ventures go online or otherwise learn about what you guys are doing?
Yeah, we've got a website actually that we've just redesigned, so would love anybody to take a look in ret.vc. We've got a blog as well. We've got some case studies on some of our investments and how we work with our strategic LPs. So there's a lot out there, but of course, anyone can also reach out to me at chris@ret.vc.
Excellent. Well, thank you, Chris. Really appreciate your time today, and look forward to many more good things coming from RET.
Thanks, Donald. Appreciate being here.